This is Bradshaw with Fulcrum Home Loans, here to do your 3 points in under 3 minutes for your market update. Point number one, we hit a landmark this last week. We have an 11-year high in mortgage applications. Mortgage applications are tracked across the country, and this last week we hit an 11-year high for total applications. Last time we did this was back in 2009. The reason we did it then was there was a huge refinance boom coming out of the '08 crash when they dropped interest rates as low as they could to try to stimulate the economy. This time it's a little bit more balanced. Yes, there's a refinance boom going on. A lot of people are refinancing because we're hitting all-time low rates. But couple that with, we have a lot of purchase applications coming in right now. They're setting records as well because we're coming out of COVID-19, people were pent up a little bit, the demand's starting to grow, summer's hitting. So the balance between the refinance and the purchase has driven us to an 11-year high. Really exciting, we're up 21% from the last year. It's gonna drive the real estate market for the coming months. So watch that as prices probably start to increase around the valley as more demand comes in. Refinances will continue to go as people try to drop their payments. It's exciting times in the real estate market. Point number two, Fannie Mae. They're the largest purchaser for mortgages on the secondary market. So when you have a mortgage, a lot of the time it gets sold to Fannie Mae. They're a government-sponsored entity. They do a lot of data. They track mortgages, stuff like that, and they do a lot of predictions. They just came out with their 18-month forecast for interest rates, and great news here as well. They expect 2020 to stay really steady, around, they said, 3.1 to 3.2%. And then in 2021, so the following 12 months next year, they're saying interest rates will average 2.9%. That's right where we're at right now, maybe even a little bit lower. The next 18 months interest rates are going to stay really low. Every indicator, I've seen this from multiple sources too, so this isn't just Fannie Mae. We're looking at the next year, year and a half, possibly 2 years of really low interest rates. Could be a great time to look at purchasing. When interest rates are low, your purchasing power is higher. You can afford more because your payment's lower. Reach out to us. We'd love to help you figure out what payments are at a 2.9% interest rate. Most people aren't used to quoting that or looking at that, so we'd be happy to help you. And finally, interest rates today, point number three, interest rates are still staying right here near all-time lows. We're seeing 30-year interest rates at 2.99, paying no points. You can pay that down to 2.75, 2.5 if you want. 15-year rates are at a 2.6, no points. You can pay that down to a 2.25. Crazy to think we can get a mortgage for 2.25. So reach out to us. We'd love to help you with either your purchase or refinance. We're really seeing a lot of applications come in. We'd love to see yours coming as well. Leave your comments below and we'll see you next week. Thanks.